Hi friends, I'm Ekta from 10paisa.com and today I'm going to explain 3 very important points related to stock market in this video. Point number 1 is fundamentals of a stock. No matter whether you are investing for short term or long term, it is wise to research on fundamentals of a company before investing. Now the question would be what you should look for in the fundamentals. So here are 5 key factors to look for while checking fundamentals of a company. Check the trend of earnings, compare it on quarterly basis and see how the trend is, whether increasing or decreasing. Have a close look at revenues or sales of the company, as it would very well throw a clear picture as to whether the company is performing well or not. For any business to survive or expand, it is imperative that the profit margin of the company is above the industry average and an increasing trend. The next factor to be analyzed is price to earnings ratio. Usually, stocks with higher PE ratio are considered as expensive stocks. The fifth factor is price to book ratio. It compares market value of a company to the book value and enables the investor to know the residual value of the company. Point number 2 is dividend. Dividend should never be the sole criteria for investing in a stock because a company is not under any compulsion to pay dividend on regular basis and it is totally on its discretion. There are times when a company looks for capital appreciation and may invest the excess money in expansion of business or new ventures rather than paying dividends to the shareholders. However, as an investor, you should always check whether the company's stock is outperforming or not, along with increase in revenue and margins. For example, company ABC pays dividend of 10% every year, whereas company XYZ invests the excess amount in new ventures or expansion. A comparison of 3 years' performance shows that company XYZ has diversified and it is growing by huge margins compared to company ABC, which is satisfying shareholders by paying dividends and has a steady performance. When it comes to investment, you should always prefer a company which looks for capital appreciation rather than the one which would pay you dividend. Point number 3 for today is diversification. Diversification across different sectors is very important when it comes to investment, as you are minimizing the risk of losing money. Different sectors perform differently at different points of time. So best example is FMCG, consumer durables and automotive. These sectors perform well during festival times compared to off-season. Diversification would help you in mitigating the risk of loss from a particular investment also. For example, you invested your entire money in oil stocks and suddenly rupee fell by 10%, which proved to be negative for oil stocks, and your holding was down by 15%. However, if you analyzed, you figure out that if you had invested 50% of your amount in IT stocks and 50% in oil sector, you would not have lost much and the impact of fall in oil stocks would have been compensated by jump in IT stocks. That's all for today. We are coming with similar videos on a number of topics related to stocks market. So guys, if you found this video to be informative, please like, share and press the bell icon so that you don't miss our upcoming videos. Thank you. Midcaps.in. No futures, no options, no intraday. Exclusive and focused service. Recommendation of 2 stocks every week with analysis report. Great experience, fundamental analysis, in-depth research, discounts and offers. Subscription is just Rs 2100 for 3 months. Subscribe now. Midcaps.in.